Hello everybody, how you doing? This is Gary Palmer with Minting Coins, live streaming on YouTube and Facebook. Checking in if anybody can hear me out there. Testing, testing, 1, 2, 3. Audio okay? Excellent. Checking on Facebook. Awesome. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for news, interviews, ICO reviews, and all things blockchain. If you're new to this channel, subscribe, and if you're new or not, I encourage you to hit that like button. It really helps encourage us, helps other people find this channel. And if you have any questions or comments, leave those in the chat box below or the comment box below, and to have your voice be heard so you can be a part of the conversation, add to the conversation, and also receive as much as you can so you can give back as much as you can. We are all early adopters at this point of the game, and this industry is going in one direction. It's going up, and we are very, very excited about that. So in this episode, we are still figuring out how this live chat system works, the whole live streaming system. We have the studio set up. We are broadcasting on YouTube. We are broadcasting on Facebook. And we are really excited about the live interaction, the engagement that we can have with people in the chat, answer questions after we go over the segments of the news, and to have that interaction with any questions that you have live. And then we're going to take these videos, cut them up, and then put them out there for everyone else to watch later in their own time. So good to see everybody out there. I'm super excited. I'm super pumped. We have a lot coming up in the year 2018. We have so much coming up in 2018. I sort of thought that this was 2018, that next year in a couple of weeks is 2019. But there's a lot happening. There's a lot going on. We are so excited, and we really hope that you're excited too. Whether the market goes up or the market goes down, we're seeing the direction that this is going. And with as much changing as it is, as rapidly as everything is changing, these are very, very exciting times. It can be really easy to get lost in the hype. It can be really easy to get lost with just old information, or it can be hard to catch up with new information just because the rapid pace that things are happening across the board. Just keep in mind, when domain names first came out and people were creating websites, every new website people knew about. And then at some point there were just millions of websites coming up, first hundreds and thousands, and then hundreds of thousands, and just so many websites and web pages that are popping up. That's what's happening with this brand new industry, of which we are not even at the early adopter phase yet. It's quite shocking. So with that being said, why don't we take a look at the market, pop around the news, see what everyone in the chat has to say, and then let's discuss. Cool. So starting over here at coinmarketcap.com, we are living in a world with the market cap is $0.6 trillion. $0.6 trillion. That's $613 billion is the total market capitalization, and our Bitcoin BTC dominance has actually decreased. We are now under the 50% mark. A lot of people freaking out in terms of watching the Bitcoin price go down, but at the same time, a lot of people doing the opposite of freaking out, which is also freaking out, but in a good way, because they're watching the prices of all the alts, statistically speaking, go way, way up, and not just up in relative to the fiat dollars, but what we really care about, they're also going up relative to the Bitcoin BTC, which is reflected because the Bitcoin dominance is going down. You know, if we were to click on this and check out the Bitcoin dominance, it's something that waxes and wanes, it's something that increases and decreases, and this sort of breathing in the market is something that people are taking advantage of to essentially create more Bitcoin for themselves. Check this out. We have Cardano over here. It's now somehow the number 6 coin in the world has increased substantially in terms of its total market capitalization. We were talking about Cardano when it came out, when it first came out, not too long ago, and it was about 2 cents a piece. And since then, it's already 10x'd and doubled. And so if you would have had, you know, even 0.1 Bitcoin in a Cardano, it would now be about 1.5 Bitcoins because a lot of this money that's been coming into the Bitcoin market over the past few months is now breathing into a lot of these other projects as people, you know, recognize the value in these other projects that they already know about, or as newcomers come into the market, and these newcomers are really excited about Bitcoin and Ethereum, but then they're wondering, where are the other opportunities? Where are the other projects? You know, they're interested in making gains, and so there's a huge amount of risk happening, and at the same time there's a huge amount of reward. Ultimately, Bitcoin is where it's at, and if you're not sure what to do, then you know, Bitcoin and Ethereum are the number 1 and number 2 coins out there, and it's a pretty safe bet that those two are going to have substantial futures in the new industrial order that we're all, you know, waking up to. What else is in here? Just huge amounts of gains. And so when we're looking at these, we're looking at this in terms of dollars. This is USD coming on the line right here. And so we're down 4% in terms of USD. And so when we look at, these all look really good. So when we look at Bitcoin Gold, for example, Bitcoin Gold, it says it's up 3.46%. But the 3.46% up is less than the 4.18% down in Bitcoin, which means that Bitcoin Gold in this case right now is actually losing money in terms of the Bitcoin price. If we change this from USD to Bitcoin, or do I have that incorrect? So this says it's up 8%. So Bitcoin Gold up 4%, while this is down 3%. Regardless, you still want to see the gains in your altcoins increase more than the losses in the Bitcoin is the essential point that we're seeking to make in here. So looking at this waxing and waning, this is the total Bitcoin dominance percentage of market capitalization for Bitcoin. And we can see how this has been increasing and decreasing over the past couple of years, with this dramatic drop going into the summer of 2017, with this, you know, resurgence in the Bitcoin dominance rather recently, and now we see it decreasing again. So just recognize that these are cycles in the market. These are going up, these are going down. So when you're sad that the portfolio is losing money, just recognize it's going to turn around, and then the portfolio is going to be gaining money. It's, you know, just like the stock market, it goes up, it goes down. It's just that the stock market is leveraged in fiat, and the ultimate value of the fiat is going to be losing value year after year because of the controlled rate of inflation from the central banks. The value of the Bitcoin BTC is going to be going up theoretically because the total number of Bitcoins are limited to less than 21 million that are ever going to be created. So if demand increases because central banks want Bitcoin, because businesses want Bitcoin, because governments want Bitcoin, because everyone in the world wants Bitcoin, but the total supply of Bitcoin stays the same or actually starts to decrease, then the value of the Bitcoin is going to go up more relative than the value of the fiat dollars, which are, you know, you can print as many as you want. So as you've seen in this one article from the Merkle, Bitcoin price drops by 3% and everyone panics for no reason. This is exactly what we're talking about. BTC price is up $10,000 in the past couple of weeks, you know, up $10,000 from the month before. Everything's fine. Everyone's happy. Everyone's excited. Bitcoin goes down a couple $1,000s and everyone loses their freaking minds. This is natural in the market. This is natural in the cycle. This is important to recognize that this goes up, this goes down. This is one of those things that happen, just like it's highly likely that China is going to be banning Bitcoin again. Or maybe America will start taking its turn banning Bitcoin. And then it'll be really interesting to see the price of Bitcoin plummet and then to see immediate recoveries as, you know, different people and organizations around the world take advantage of that fear, uncertainty, and doubt that people are being affected with, and then jump in to buy Bitcoin and buy these cryptocurrencies when these awesome dips happen. If people are ever talking about Bitcoin like this and they're saying the sky is falling, that's typically one of the best times to then go out and purchase Bitcoin, knowing that the price is likely going to recover. Now, none of this is financial advice, and you shouldn't be actually trading and trying to make money off of things that I'm saying, but these are just patterns that we've noticed in the past that have a high likelihood of continuing to happen into the future. So what's also interesting as we're talking about the market news, excuse me. So what's also interesting as we're talking about the market news, as we're seeing in this one article from ccn.com, it's speaking about the Ethereum price posting an all-time high nearing $900 as the Bitcoin dominance is slipping below 50%. And so we were talking about the Bitcoin dominance slipping below 50%. Again, at this point right here across this line, and we see how the Ethereum price in US dollars is nearing $900. It was actually probably touching that $900 not too long ago. We're down to $838. It's still a huge number for Ethereum. People are super excited because they're expecting Ethereum to not just hit $1,000, but to blow past that $1,000 mark. It's definitely at an all-time high when you compare these values in terms of the fiat dollars. But as people are talking about the all-time highs of Ethereum and people are getting really excited about the all-time highs of Ethereum, I think that the top can be much, much higher than where we are at for all of these coins because of the Bitcoin dominance. Because the Bitcoin dominance was so low before, the Bitcoin dominance was, let's see what this is. If I can pop this. You know, it was just under, it was under 40%. So, you know, at least 39%. It might have been 38, 36, 37, 38%. Right now, we're just under 50%. And as the Bitcoin dominance increases, that means that the total value of the total market cap is more in these other coins that aren't Bitcoin. More in these other coins as people are seeking diversification. More in these other coins as people are seeking, you know, to support different projects out there. So when people are talking about this Ethereum at the all-time high, when we click into coinmarketcap.com and we click in to look at the charts specifically, we have all of these lines down here at the bottom of the page. And so, I'm happy to see all of this. So all these lines at the bottom of the page. So if we click on this, we can see the 24-hour trading volume that's been happening and how much trading is going in and out of the market with the buys and the sells. And then if we want to look at the total market cap coming into the space, we can see how this total market cap has been increasing and decreasing, cup and handling, and then spiking up. So we see it going way, way up in terms of the total market capitalization of Ethereum. And when we overlay the US dollars on top of that, we see how that's reflective in the US dollars and how we are absolutely at this all-time high for Ethereum. But now when we take the Bitcoin price and we overlay the Bitcoin price on top of the dollars, we can see that we are actually not at an all-time high for Bitcoin, that the all-time high for Bitcoin was the price of 0.14 Bitcoin. So 0.14 Bitcoin was the all-time high, and I can tell you that one of the reasons that Bitcoin probably hit, that Ethereum hit this all-time high relative to the Bitcoin price was because this was the time zone that people were purchasing extra amounts of Ethereum in order to purchase into the ENS system, the Ethereum name system, the Ethereum name service, which is the .eth decentralized domain names that can be used and substitute for the long public Ethereum public address. And so you can donate directly to Minting Coins through our long donation address for Ethereum or any of the ERC20 tokens. But at the same time, you can just donate directly to mintingcoins.eth. So we have mintingcoins.eth, and if you wanted to donate Ethereum or ERC20 token, you could do it directly to that. And that's what these ENS names are. And so there's a lot of purchasing of those at this point of time. So yeah, so if we were to take this current price of Bitcoin and which is currently 0.04 in terms of the Bitcoin price, it's 0.04. Essentially, imagine 4xing this, and that would be the relative price to where the all-time high was Bitcoin. I don't know if it's reasonable for that to happen, but nevertheless, if you're buying and selling, if you're trading, if you're interested in accumulating more Bitcoin, then just recognize that there's huge differences when people are always gauging by the dollars. And at some point, there's going to be a shift where more people are actually gauging by Bitcoin instead of the dollars. And if you want to get ahead of that, if you want to get ahead of the world, if you want to get ahead of the market, then you'll make that shift yourself sooner than later. And it's not just Ethereum going up, it's also OMeZ going up and OMeZ Go. And OMeZ Go is just really, done with its downturn. It was really going down for a long time, for the past month or two, since its all-time high of reaching about $20 before. And while it's maybe at a new all-time high again, it's about less than half of its all-time high in terms of its Bitcoin price. And so OMeZ Go has a long way to go in terms of meeting where it was in terms of its all-time high of Bitcoin, but nevertheless, Vitalik Buterin had tweeted out earlier this month that right now his favorite token model is the OMG style staking tokens. OMG style, which he is the advisor for, one of just 2 or 3 companies that Vitalik is an advisor for. And the reason he likes the OMG style staking tokens is because it's not a medium of exchange token. You're not using this to buy and sell things necessarily. It has a clear valuation model in terms of the expected discounted future transaction fees minus the cost to operate a node. And then it also requires running the node in order to get the returns. And so this isn't passive income that people are making just by simply holding, what would be defined as a security. They're actually taking this utility token of OMG, and then they're, having to do something physically with their time and their energy and their mind, which is set up these nodes. So that's actually not passive income, that's work. And so it's more legally defensible, these OMG tokens, which I guess is the exact same model as the Zen Cash and the Zen Cash secure nodes that's happening in that world as well. So this has caused a lot of interest from the community to move toward OMG. OMG is something that I'm super interested in, and that a lot of people are interested in, because OMG is the tool that Ethereum is going to be leveraging, that Ethereum plus Plasma is going to be leveraging to create millions or at least tens of thousands of transactions to happen per second. So right now we know Ethereum is congested and this needs to get fixed, it needs to be resolved. But at the same time, I like to think back about the internet days. I like to think about, doing research projects on the early internet and using dial-up or early DSL connections perhaps. And it took a long time for images to load. It just line by line sometimes it was difficult. It was just the way the world worked with this new awesome thing called the internet. Just having it was worth the fact that it was so slow, but the speed quickly we realized was a huge issue. With that being said, there were probably people who thought the internet was never going to be used, no one's ever going to put their business on it, or put their credit card in it, or receive, you know, shoes in the mail from purchasing something through a website. They probably never thought you're going to have live video streaming through the internet, because it would never be possible to pass enough information through a phone line. It would never be possible to pass enough information through a DSL line. And at that point, it would never be possible to pass enough information through a cable line as well. But they laid down these fiber optics, they created new systems, they created additional protocols, and they made the system work to a point now where we have live streaming internet from any person to any person across the world, and all you have to do is pay for the access to the connection to the internet itself. So the internet was able to achieve this level of scaling through different systems, through different mechanisms, and so I think it's reasonable to recognize that there's this huge possibility that very smart people are working on this problem, and that very smart people at some point will come up with a solution to this problem. Now, if EOS or Cardano or Neo or any of these other sort of systems which are very similar to Ethereum, if one of them are able to solve the problem quicker than Ethereum, and before the delta of, you know, a shift of people using the new platform, then that would not be good for Ethereum. But you know, Ethereum has a huge head start, and Ethereum also has a lot of benefits in terms of its decentralization, and the path forward to maintain the decentralization of the Ethereum blockchain, as opposed to the way Neo or EOS might be going about it, which technically might be in some ways less decentralized than the goals of where Ethereum wants to get to. So let's go check out the chat. Let's see how everyone's doing out there. Everyone, these awesome, beautiful, lovely people. Where's everybody in the world? Oh, Busy Mountain. I see what you did there. That's funny. Yeah, so Busy Mountain asks what's up with Bitcoin as cash. And so right now, you know, Bitcoin is working on the Lightning Network. And then once the Lightning Network is validated and is implemented across more users in the world, more networks, more businesses in the world, that's going to create the opportunity to allow Bitcoin as cash. Right now, we can't use Bitcoin as cash. Right now, if we want to pay someone with a quick, fast payment transaction, then most people are using Litecoin. Some people are using Dash. Some people are using Monero. And then there's definitely a group of people who are using Bitcoin Cash. Yeah, so a lot of ups and downs in that world. Someone says Bitcoin Cash is taking over. Yeah, no, they're definitely trying. You know, it's probably wise to hedge your bets, and probably, you know, even though you're locking up Bitcoin Cash and you're holding up Bitcoin Cash, just like the pro Bitcoin Cash folks, you might be anti-Bitcoin. I don't think it would be wise from their perspective either if they sold all their Bitcoin, obviously. But Bitcoin Cash is going to try to take over. There could be a black swan event. We never know if and when there's going to be a black swan event. So it's a good hedge. I don't think they're going to do it. I think they're going to try. I don't think they're going to win out. Ultimately, I think everyone's going to want the original BTC. Okay, so yeah, so I can't say if like you should buy, if you shouldn't buy. You know, all I know is that a lot of people talk about dollar cost averaging, and a lot of people talk about consistently buying into the market, and they also talk about only, you know, spending or investing what you can afford to lose, because Bitcoin and investing and all of these financial instruments do have a fair amount of risk. You know, generally speaking, you don't want to buy when everyone's talking about it, when it's at an all-time high. It's probably not a good time to buy. If you're just hearing about Bitcoin and it's at an all-time high, you should probably understand a little bit more how the technology works before you're, you know, just throwing money in something because everyone else is talking about it. Some people are excited about EOS. if I'm saying that right. So we got EOS. Yeah, EOS isn't really 100% decentralized in my mind. I've heard Dan Larimer talk about this, and EOS is going to be using the whole witness system. And so these witnesses are going to get voted in. These witnesses, might be randomized in how they get picked. These witnesses might have an economic incentive to do what they're supposed to do. But with that being said, if there's like 12 witnesses or 50 witnesses or only 100 witnesses inside the system, it creates, a concern from our point of view that there's only 100, witness nodes, which, a theoretical number of them could be compromised. People here from Rochester, New York, from New Zealand. Litecoin is doing fast payments. Yep, that's how most people are getting paid, with quick, fast payments and transactions. People are loving that. Works on the same sort of system with the future technology as all of Bitcoin is going. We're not big fans of IOTA just because of all the security concerns we've heard about the technology. And it really seems IOTA is going up against both Cardano, and IOTA is going up against Ethereum Classic. And, between the network effect and because of all the interested parties and the businesses that are involved and created around Ethereum Classic and Cardano, even though IOTA might have some good news and they have an interesting product, they could be wildly, wildly successful beyond the success that they've already created. But IOTA, not looking good for us. Cool. So that's about that and all the chat. Yeah, Bitcoin down for the last 2 days. Bear market coming. Everyone's freaking out. That's what we were talking about. Bitcoin's been going up and up and up, and everyone's excited. A bear market could happen anytime. That's why we always have to be aware of diversification and also not selling just because we're scared, and not buying just because we're scared, right? You don't want to purchase just because of the emotions. So cool. So we're going to be moving on over here. So according excuse me. So according to ccn.com, according to Japan's finance minister, Bitcoin isn't a credible currency, but he hedges his statement by saying it's not a credible currency yet. And so speaking to Reuters, the former prime minister, who's now the finance minister, said there's no fixed definition on whether Bitcoin is a currency or whether it's not a currency. And that despite its situation of Japan as being this technological hub, this technologically forward society, Japan is seriously lagging significantly in digital payments and digital payment adoption when compared to other countries in their region like China and Korea. And this is a big, big deal. The whole one of the reasons, at least, that Bitcoin and blockchain technology is so revolutionary is because of the decentralized nature of the technology. But the reason why the regulators and the banking institutions love blockchain technology is because it allows for incredible speed of payment transactions, which can unlock huge amounts of capital, even if the total amount of money supply was to remain the same. And so the fact that people are using cash more so in Japan is creating more cost and slower growth, as opposed to if the people were using digital payments for fast and quick technology. And this includes credit cards and PayPal and that sort of stuff. And so what we're seeing is that the adoption rates are 19% of Japan is using digital payments compared to China and Korea, which are seeing 50% of their societies that are embracing the cashless payment society. And so what's happening is that Japan wants to encourage cashless payments. Japan has this focus to focus on fintech growth and this fintech growth strategy to double the adoption rate of digital payments in Japan over the next decade. And a part of this strategy is obviously to facilitate the use, the awareness, the adoption of Bitcoin and cryptocurrencies as we're seeing in other aspects of news around the world. And what Deutsche Bank, a Deutsche Bank analyst wrote recently to clients was that they think that the Japanese retail investors are actually shifting over away from leveraged foreign exchange trading between the Japanese yen and other currencies around the world like the dollar, and they're actually moving over into the cryptocurrency trading. And so this is what Deutsche Bank is telling their clients about not just Japan, but about where the Japanese society, how they're spending money and where they're spending money. And if Deutsche Bank clients and banks around the world are recognizing that more people are using Bitcoin and cryptocurrencies, it's only a matter of time before the central banks start holding Bitcoin and cryptocurrencies in their own reserves, in their own books, in their own balance sheets. 2018 is going to be the year that we start to see this. And so we are hearing this from Japan and from the highest level of government in Japan and from the finance minister, them essentially saying it's not a currency, but they're not going to restrict it. So over here in Cointelegraph.com, we see this headline where a $240 billion Japanese company is going to start paying their employees in Bitcoin. So this Japanese company is GMO Internet, and they're going to start offering employees the option to have a portion of their salaries in Bitcoin as soon as February 2018, just around the corner right here. So this is over 4,000 people who receive up to 100,000 yen monthly in Bitcoin. And so employees can receive their salaries by Bitcoin if they want to. And why, what is the stated reason in this quote that GMO Internet is doing this? Well, GMO Internet wants, they hope at least to improve their own literacy of virtual currency by actually using it. And so they want people to actually have Bitcoin, and who accepts Bitcoin in Japan? Every single retailer practically accepts Bitcoin or cryptocurrency, or has the option to accept Bitcoin and cryptocurrency across the entire nation of Japan. And now this company with 4,000 employees is going to be giving this cryptocurrency to people. These people are going to start learning about Bitcoin. They're going to start learning the differences between Bitcoin and fiat money. They're going to start asking questions like, what is money? And this is going to dramatically shift their awareness and their actions consciously and subconsciously into wanting to hodl Bitcoin and to use Bitcoin and cryptocurrencies alike. This is going to increase the goal, the fintech strategy goal in Japan of getting more people to more quickly adopt digital payment technology. And this is going to create a huge amount of inflow of Bitcoin into the land of Japan, into Japanese society, so that if something happens with fiat currency, with the global financial system of US dollars and Japanese yen and whatever other fiat currencies there are in the world, Japan is going to be poised, and their citizens will be poised, all with Bitcoin wallets, all with a little bit of Bitcoin, and all of that little bit of Bitcoin can get real, real big in terms of its future valuation. So this article also goes on to note that companies doing this, offering Bitcoin, is not very different from companies offering pensions and other investment options. And as crypto holders are receiving Bitcoin, it's going to be different than savings accounts, which have other access controls and other rules and other restrictions centralized, as opposed to the Bitcoin technology, which allows people to have their own sovereignty and their own wealth without requiring on third parties to, trust them or depend on them to hold their value or to send and receive their value. And so people are receiving more Bitcoin. We also would expect to hear more news about organizations accepting Bitcoin. So in Japan's strategy, that's exactly what we're seeing with the rise and the growth of the Bitcoin adoption in their nation. This is a perfect example of what a smart country would do to create as much inflow of this crypto water, of this power, of this energy, which will just enhance just the nation of Japan, right? And as you know, for the United States, for example, this is what I'm trying to say. If we're pushing out the Bitcoin awareness, if we're pushing out the Bitcoin adoption, if we're telling people that Bitcoin is you know, a bubble and it's all gonna fall to pieces like tulip mania, then no one in America is gonna have Bitcoin or any of these cryptocurrencies, or an extremely low percentage of people, as opposed to Japan. In Japan, where there might be a huge percentage of the population that has this. And it's a difference between the regulators in the country allowing it in, you know, a wink and a nod saying, you know, you're going to be taxed on this, and we're not going to say it's illegal, but we're not going to say it's illegal, and you're responsible for the risks involved with this blockchain technology. But it's a difference between allowing this flow, that, you know, to come into the country versus pushing it away. And so in this article from Finance Magnates, we have Japan's largest car dealership who's now announcing that they're going to be accepting Bitcoin as an experiment in 24 of their locations. And so largely, as we've been talking about, the Japanese society and the Japanese government has accepted the new age digital coin with open arms. And this company is listed as IDOM Inc. on the Tokyo Stock Exchange. And from all of these 24 stores, they're going to be accepting Bitcoin payment up to 100 million yen, which is about $888 per purchase. And so my math skills aren't, oops, that was good. So what is this? Oh man. All right, keyboard. Where are we at? 18,000? So right now they're going to accept up to let's say about 50 Bitcoin per transaction. So if you wanted to buy, you know, I guess something that costs currently over $1 million, you won't be able to do that. And with the value of Bitcoin increasing and decreasing, this is really, really interesting. But this is definitely good press for Bitcoin. This is definitely good news for Bitcoin. Everyone in Japan is going to be hearing about this. And what's really interesting in that the whole Asia Pacific region, you know, down into the APAC area and stretching across Asia, people are definitely paying attention to what's happening across all of these different countries. If you're in the middle of America, or really anywhere in America, you're probably disconnected from what's happening in the rest of the world. But in Japan, they're definitely connected with what's happening in China, what's happening in South Korea, and vice versa as well. So different countries in the area are definitely realizing that more people are going to be getting paid in Bitcoin, more companies are going to be accepting Bitcoin as payment, and that this is going to be driving the cryptocurrency strength of these areas. And so the last point that we're going to talk about Japan and the Japanese society is that the Japanese banks are thinking about making their own cryptocurrency called the J-coin, which is something that we've talked about. Sorry about that. Just realized you guys couldn't see me. So the last thing that we're just going to say about this is that what's happening in Japan and what's happening between the regulators, the governments, the central banks, the people, the businesses, you know, the consumers, everybody, is that the Japanese banks are also thinking about making their own cryptocurrency called the J-coin. We've talked about this extensively in the past. This is actually a super old article from the end of September, but they've been talking about this, you know, straight through the summertime. And so this might be in the future for the Japanese people, where they start acquiring all this Bitcoin, they start acquiring all of this cryptocurrency, and then the Japanese banks will have this new, you know, J-coin, where people, it might have a great exchange rate, it might have extra benefits, who knows, like what carrots or sticks they may use to get people to use the J-coin, but this would be then a medium of exchange for the banks then acquire their own Bitcoin while providing other products and services. However they're going to get people to want to use the J-coin, I don't know. It'll definitely be interesting to see how all the countries in the world roll out with their own bank coins and their own country coins. There's going to be a lot happening. So just want to give a shout out to Joel. Joel, thank you for joining us on Patreon. That's super awesome. We can't thank you enough. We do sponsored videos as a part of this station, that help fund us and to help keep us going. This takes an incredible amount of time to research all of this, to pull these articles, for us to run the analysis, to create these videos, to cut these videos, to syndicate these videos, to make connections with other people, to leave comments on videos, to answer people's questions, to answer people's emails, to run our Discord chat. We run meetups locally for our local community in and around Rochester, New York, at Bitcoin-NYS. You can get right to our meetup link, for our meetup. There's so much that we're doing, and we're not crypto rich. Unfortunately, we have a little bit of crypto, but we weren't in a situation, we weren't in the game when Ethereum was $10 or $5 a piece, right? We were involved when Ethereum was, $7 a piece. That's when we were at a point, with our family and our 5 kids, that we were able to start getting our toes in the ocean, our feet in the ocean. We really went, knees deep. Because we have believed in this technology. I personally have believed in this technology for the longest time. I just didn't have the money to invest raising a family and just moving through my career. And the reasons that we're running this channel, the reasons that we're bringing everyone this information, the reason that we've let this consume so much of our personal time and invested, our personal wealth into, silly things like lights and cameras and stuff, so we can tell more people about this technology. We can get more people involved. We can get more people to have their own Bitcoin address, their own MyEther wallet address, their own Trezors. So they can, if they can bear the risk, they can consider getting a little bit of Bitcoin or Litecoin, making a transaction, with Litecoin because the Bitcoin fees are too high right now, helping them understand how the Lightning Network is going to make the fees lower, and how the miners have an incentive for higher fees because they're making those transactions, on every single transaction. Talking about how Bitcoin Cash is a good hedge in case the Bitcoin system does for some reason explode. And so, thank you very much, for the patrons who are donating. Thank you very much, Joel, for being there. You've been there for a long, long time, and I've already appreciated your support and liking the videos and commenting the videos. So many of you out there. Our engagement rates are just far, far better than channels that have, 4 times our size or even twice our size. You guys liking and you guys commenting are just awesome. And so thanks for financially supporting us. If we had, 1,000 people to each donate $1, or 100 people to each donate, however that math works out, it'd be great to be able to have true independence, and we're really looking forward to getting to that point, so we can do this. Even more. Okay, so let's go over the chat. Let's see what's happening in the chat. Thank you, Joel, again. Let's see here. Fox ICO highlights new coins. So rough to play. Your strategy is for 2018 is to check out the white paper and buy coins that are less than $1. Yeah, that's definitely a strategy, and one of our problems with the trading and the market analysis is that I guess originally we were sort of being logical, and then we just recognized the market is largely illogical, and that's why a lot of people are comparing the cryptocurrency market that we're in to 1999 or the year 2000 with the .com bust and crash, keeping in mind that when the .com bust crashed, and even though AOL doesn't exist anymore, Bitcoin is not like AOL, Bitcoin is not like pets.com, Bitcoin is a technology, Bitcoin is a protocol. Bitcoin is like a telephone wire. Bitcoin is like the internet itself, the TCP/IP. So AOL can go out of business. Pets.com can go out of business. 90% of all the companies on the internet can go out of business. The internet is still going to exist, right? And so 90% of all of the Bitcoin companies, 90% of all of the altcoins in the world, they can all crash in terms of their percentage of Bitcoin value, right? But Bitcoin itself is a technology. Bitcoin itself is a protocol, and for that reason, we don't see Bitcoin crashing in the analogy of a dot-com bust, of a dot-com boom. But with that being said, the market is being run by emotions, and so there's just like with Cardano, I don't even know what the news is of Cardano. I'm not even sure why Cardano is going up. There's just too much going on in the world for me to have even researched it. But again, if you would have purchased any amount of Cardano, it's already 10x'd and doubled since we showed people about it when it first launched at 2.5 cents or so. Yeah, so let us know how that strategy goes. Rough to play. Thank you, Joel. Being seen is very difficult for any human, and thank you for recognizing us. Daniel asked, how high do we see Bitcoin going? I'm not really sure what your time frame is for that. I mean, we've talked about this extensively, where I know it's important to recognize the price per Bitcoin can go over $1 million per Bitcoin. The price of Bitcoin theoretically could be $10 million per Bitcoin. And so when we're talking about the price of Bitcoin for 2018, I mean, I think $100,000 for the end of 2018 is super reasonable. How can it not? I mean, we just saw it 10x. We just saw Bitcoin 10x in 11 months from December to November. Yeah, it's crazy. All right, so cool. Wet my lips. Yeah, I'm not sure how I say your name. Is it Usajinami? Usajinami? My apologies for slaughtering that. Yeah, it's always interesting to how we define a lesser coin. Yeah, because there's definitely coins that we support that aren't always in the top 100 that are just interesting projects in terms of the privacy aspects and in terms of the technology, in terms of the team or maybe the community who's involved behind it. By and large, yeah, we need to stick with what we know. We need to stick with what we believe in. And what it is that we believe in is peer-to-peer decentralized technology, peer-to-peer blockchain technology. We believe in open source technology. We believe in affordable technology that as many people in the world can participate in. Cool, Joel. Joel, check you later. Thanks for swinging by. We'll have this last video that we're going to go over. We're going to go over a few more articles. We'll be posting that later. So this is very interesting news. We have this article coming out of Cointelegraph.com that says from the blockchain.info CEO that the central banks in the world will start holding crypto in their balance sheets and in their reserves in this year of 2018. And so blockchain.info CEO Peter Smith, who was speaking on an interview on CNBC, had stated that I think this year, 2018, speaking, will be the first year that we see central banks start to hold digital currencies as a part of their balance sheets. And so traditionally, central banks, they want to hold world reserve assets. They want to hold world reserve commodities. So they have a balanced portfolio. So if one country has war, that they still have currency from these other world reserve currencies, which would still be accepted. And so they can balance transactions from one currency to another by having both currencies in their accounts. And there's a lot of reasons, as you can imagine, why central banks hold all of these different currencies like dollars, rubles, yen, gold. And what Peter Smith is saying is that in 2018, they're also going to be holding crypto. Could be Ethereum, could be Bitcoin, could be a percentage of any of the coins that go on the top 10. I mean, they could have a program to buy 1/1,000,000th of every coin that ever exists, and they have the capital to actually purchase that at this point of the game. So what else does he say here? So Smith goes on to talk about how in South Korea that they have announced with the governments and the regulators that they're not going to say that Bitcoin is legal. They're not going to say that Bitcoin is a currency, but they're also not going to say that Bitcoin is illegal. They're essentially going to give the wink and a nod that you have the ability to use Bitcoin, and you are going to be assuming a lot of risk for playing with Bitcoin, and you're definitely going to have to pay your taxes for making capital gains in Bitcoin, but we're not going to tell you it's wrong. We're not going to tell you it's illegal. We're not going to tell you it's a scam. We're not going to tell you necessarily that it's a bubble or that it's comparable to tulips, but that's what's happening in South Korea. And also South Korea, Shinhan announced that it would be the first major bank to offer customers Bitcoin wallets and storage. Seems really risky to me as a centralized point of hacking, but nevertheless, that bank is going to be offering those services in South Korea. Conversely, I suppose, the governor of Denmark's central bank this week described Bitcoin as deadly and urged their citizens to stay away from it. And so this is really, really interesting. And so we just, in the previous video, talked about Japan and talked about the Japanese government allowing Bitcoin to be used, to be accepted, sort of saying it's not a currency, but saying it's not a currency yet. And not only are the Japanese people hearing this information, but the other countries in the region, like China, South Korea, even countries across the EU are also hearing this. And so South Korea is taking a similar sort of stance that we see Japan taking, but the Denmark central bank is taking the extreme opposite. They're telling people it's deadly. They're telling people it's like tulips. They're pushing people away, and they're pushing Bitcoin and blockchain technology out of their countries, where Japan and South Korea are creating an inflow of these Bitcoin and cryptocurrency into their countries. And additionally, on top of just that, at the regulation level of the cryptocurrencies that we know and love, we also have central banks that are likely going to be issuing their own cryptocurrencies, their own branded digital assets. M&T Bank coin, Bank of America coin, who knows, right? And then not only are the banks going to be issuing their own cryptocurrencies, Ripple, I suppose, is another example. UBC is another example. But in addition to that, we also have governments like Russia issuing the bit ruble. We have Dubai talking about issuing their own cryptocurrency. Just like in the other video with Japan, we know Japan has long announced its plans and desire to issue a J-coin based on blockchain technology to facilitate these fast digital payments that transact and reconcile very, very quickly. And so once these central banks start holding reserves, once people see the balance sheets of the central banks and they see crypto, they see Bitcoin, they see Ethereum, that is just going to trigger a psychological response in other banks, other central banks and other banks. It's going to trigger a psychological response in the minds of governments around the world, in the minds of business leaders at every level of the game, and then it's going to trickle down to other business owners and then consumers. It's going to create a financial arms race. Once the central banks, who have been saying Bitcoin is a scam, Bitcoin is a Ponzi scheme, Bitcoin is deadly, Bitcoin is like tulips, Bitcoin, the sky is falling, Bitcoin, will give you an STD. I don't even know. everything they're saying about Bitcoins, and now finally they're saying, well, we're going to do these Bitcoin futures, and Bitcoin is really deadly, but we're going to buy a whole bunch of it and put it on our balance sheets. No. Once people see that they're putting Bitcoin in their balance sheets, there's going to be this financial arms race. And once that financial arms race happens, wow, if 2018 is the year that these banks put Bitcoin on their balance sheets, then 2018 could be the year that we see Bitcoin fly past $100,000 a coin. And so real quick, just to underscore the sort of thinking from these different thinkers across the world who are trying to take Bitcoin and fit it into their existing box. Bitcoin doesn't fit into the existing box. They're trying to understand it with the existing system and the existing way of doing things, which has dominated our world for about the past 100 years. And so over the past 100 years, hundreds of years ago, back around 1668 maybe, we have tulip mania, where the central banks were not issuing tulips. And because the central banks were not issuing tulips, the central banks weren't able to control the money supply of tulips. And now, central banks aren't issuing Bitcoin. It's no one's issuing Bitcoin. It's just a protocol that has rules and sort of governs itself. And so because of that, they're saying that Bitcoin is deadly. According to this article at coindesk.com, the Danish central bank chief says stay away, comparing it to tulip mania and saying that the whole industry is completely unregulated, thus provides no protection by the authorities. And I have very, very good news for you. And he has very good news for you as well. It is the responsibility of you as an individual, as an investor, as someone a part of this human revolution to what? To not complain to them if anything goes wrong. It's up to you to be responsible for your own wealth. It's up to you to be responsible for your own sovereignty. And he says this to you in the form of a sort of warning. And I say this to you as a form of reward for being a part of this news and being a part of what's happening in our world. That this responsibility, for the first time since gold was made illegal, is now back in your hands. It's now back in the hands of the people of this world without borders, without definition, beyond the rules of the defined Bitcoin protocol. So this is just the history of how they think about Bitcoin as well. Back in 2014, the Denmark's national bank compared Bitcoin to glass beads and again said that Bitcoin is not money because it's not backed by an issuing institution. Again, trying to fit Bitcoin into the old world line of thinking. And this is just in contrast to what we're seeing from ccn.com, where the South Korean financial regulators are saying that Bitcoin isn't a currency, and because it isn't a currency, it won't be regulated. So they're not saying that this is deadly. They're not saying that this is tulip mania. They're not saying that this is a bubble. They're saying that for the primary reason, according to the authorities' governor, is that the lack of recognition of cryptocurrency as money doesn't exist. And so there's no recognition of cryptocurrency as money, so cryptocurrency is not money. And so all that they can do, what the governor is saying, is that all they can do is warn people that they don't see virtual currency as the actual type of currency, and so they can't stop it, and they can't step up the regulation, and they can't step up the regulation, at least for now. And so what they can do is oversee that the local Bitcoin and cryptocurrency stops with a handful of rules without getting into the deeper regulations. And what these rules are going to focus on is a framework for enforcing the taxation of the cryptocurrencies, because everyone needs to always pay their taxes. But essentially what they're doing, on one hand, just recognize that the one government of Denmark is, the regulators at least, they're saying Bitcoin is deadly, stay away. And on the other hand, we have South Korea saying, use it, allow it in, just like Japan is doing. And at this point, what we're recognizing and what some people are talking about over here on Reddit is that it may be extremely risky for the wealthy to not invest in the Bitcoin. And just thinking about the mindset of people who have lots of money, millions and millions, tens of millions of dollars, the only risk that they have, they're diversified across money, property, houses, collectibles like cars and art, stocks, bonds, gold, silver, all of that. But overall, if the value of money goes down, if the value of the fiat goes down, then that's going to have a huge hit to their portfolio if their portfolio isn't balanced with all of the existing financial instruments that are now a part of the world. And so before, if they were diversified across 100% of all of the financial assets in the world, and now there's these new asset classes around Bitcoin and other types of blockchain technology, decentralized and not, then there's now a percentage in the portfolio that's missing. And they're assuming this risk that the rest of the fiat is not going to go down. And if that fiat does go down and they don't have the other part of the world financial market to balance that portfolio, then that's just going to create a sense of risk for them, especially as they see their friends, their maybe family, hedge fund managers, countries, central banks start holding their own cryptocurrency. That's going to create this psychological trigger that they also need to get in the game before it's too late. Now, real quick, I want to see if I tweeted something. Oh yeah, cool, I did. So check this out. So we have a Bitcoin fund manager looking at some charts over here, and I thought this was funny. I had to share it. Some rich noob spent $100,000 per Bitcoin, even if it was for a fraction of that Bitcoin. They spent $100,000 per Bitcoin on this website on November 28th. So that's just really interesting. Someone was just like, "Oh, I want Bitcoin." They just threw in a bunch of money. They said, as much as this much Bitcoin, and he just bought it. They had. And somehow I don't even know exactly how that happened, but it was just someone that had a lot of money, and they wanted Bitcoin, and they just went in and they was like, I just want it. They probably don't even know how it works. And so just recognize that that's going to be happening. And so the point of this video is that 2018 could be the year that we see the central banks start to not just accept cryptocurrency as an asset, but to actually hold it in their balance sheets, making a shift from saying that Bitcoin is deadly, and then other banks moving further down the road into the Bitcoin legitimacy, which will create the room for them allowing to have it on their balance sheets and have it on their banks. And this creates these other psychological triggers, this financial arms race between the central banks, the governments, the business leaders, the consumers, to then recognize that they need to get on this Bitcoin train that can exacerbate the price of Bitcoin beyond belief. And it can happen rather rapidly. It just adds on to the fact that Bitcoin is going to be going through many years of volatility, even though the ultimate trajectory is on that upward moonshot sort of hockey stick motion. And so the last thing I just want to show you and bring up to you related to all this is that we've talked about the number of people who own Bitcoin in the past, and we know the number of Bitcoin wallets that exist. We know the number of Bitcoin wallets that exist and the number of those wallets that have at least, 0.001 Bitcoin or something to that effect. And when we look at the number of those wallets that exist, we got to recognize that some people own multiple wallets. Like maybe you have like an old wallet you use there and an old wallet you use there. And so the actual unique number of owners is going to be less than the total number of Bitcoin wallets that have a certain threshold of Bitcoin on it. And when we look at those wallets and we look at how many of those wallets have Bitcoin on them and we divide those wallets by the number of people in the world, we recognize that less than 1% of the whole world is involved in Bitcoin. Less than 1% of the whole world. It's probably less than 1/10 of the whole world, even with updated numbers, people who are involved in Bitcoin. And so when we look at this technological adoption curve, I can zoom this up a little bit. See how big I can make this. We see that the early stage of this are the innovators. And this is putting the innovators at 2.5% are the risk takers who have the resources and the desire to try new things, even if these new things fail. And so if less than 1%, if less than 10% of the world is involved in the Bitcoin blockchain, the Bitcoin technology, then, and you're watching this video and you have any amount of Bitcoin whatsoever, then you are a part of this early 2.5%. We are not at 2.5%. We are not at 1% yet. We are not at 1% yet. You are before the 1% of adopters if you have any amount of Bitcoin. And right here, this line, you're looking at the end of 2018 or maybe 2019, because shortly after we get into this line is going to be 2020. We're going to have the next halving, and the next halving, it's possible we could be past this 13%. And so when the banks get on, when the banks start holding it on the balance sheets, when countries start holding Bitcoin in their treasury reserves, when corporations start holding Bitcoin as part of their asset portfolio, when people are investing in a Bitcoin in their 401k, this is going to be crazy. This is going to be exponential. And what's really deceiving about this graph is that this is the technological adoption curve of the percentage of people who are getting involved into the Bitcoin and the blockchain technology. But then on top of this, we have the S curve, which is showing the total percentage of penetration across the planet as more and more people enter into the adoption and acceptance and usage of the technology. And it's just to emphasize that even with Bitcoin being $20,000, the potential for it to go up is practically infinite versus the chance of it going in the opposite direction, minus some, astronomically, statistically low catastrophic event, which if something like that was to happen, then, there's a lot of other issues that people have to worry about. And hopefully you have canned food and lead, because, that's what a lot of people say is the most valuable stuff in the world. Cool. So, whoa, Bob McCall, $10. Thank you very much. That's crazy. Thank you very much. Wow, that's our first super chat ever. That's very cool. Thank you very much, Bob. Let's see. Thank you very much for recognizing the reporting. That's what we do here. Talking about a lot of the macro, getting into the micro to some degree. All right, so Rough to Play says that can't really see the point of creating these national currencies. It goes against the Bitcoin white paper principles of decentralization, borderless, peer-to-peer transactions. Yeah, so first of all, let's recognize that nations and banks don't care about the white paper principles, and they're probably against the concepts and principles of decentralization, borderless, peer-to-peer transactions. But let me help you maybe have some clarity about why national currencies would want to become, blockchained, and what the benefit of that would be. And so paper money inside the United States is paper money. Even when you're transacting it from a bank to a bank, it takes some amount of time. Sometimes a bank wire transfer can take a day. Sometimes a bank wire transfer can take a couple days. I was talking to someone recently who said that a bank wire transfer for them always takes a couple hours, and I just thought how lucky and privileged that they must be that they can, be able to get and receive and send money so quickly, when for most people it takes a long, long time, and the percentage cost is just astronomical for the amount of money that people are sending. Anyway, the point is that the fiat currencies are slow. They are not fast. They take a lot of time to reconcile, and there's a lot of cost involved. And so the two disadvantages of fiat money compared to blockchain technology is that it's not fast and it's not cheap. The reason banks love blockchain technology, they hate Bitcoin, but they love blockchain technology, is because blockchain technology will make fiat both fast and cheap. And so the fiat money will not have the principles of Bitcoin or the principles of the Bitcoin white paper. But regardless, the banks and the regulators can take the advantages of the technology and use it for their own purposes. Maybe that makes sense. But why would anybody want, the fiat currency? Well, we have to recognize that in business and politics, there's systems of sticks and carrots. And so sticks are the consequences of using Bitcoin, or the consequences of not using the fiat cryptocurrency. And that can be balanced either somewhere between 0 and 100% with carrots. And the carrots are the incentives of using the incentives of using the fiat crypto, if you will, the Fed coin or the bit ruble, and the disincentives of then using, not receiving values, not receiving additional benefits if you use the Bitcoin currency. Now, short term, this is going to let the cryptocurrencies, or the short term, this is going to let the fiat currencies compete with the cryptocurrencies. As the fiat currencies also control the government, they'll be able to use these sticks and carrots to sort of get people to do what they want, right? Marketing and rules, a combination of marketing and rules, fear tactics, who knows? So a lot of this stuff already happened with gold 100 years ago. So go check out to see how that worked. And then what else? And then in the case of Russia and the bit ruble, we saw that people are going to be able to convert Bitcoin into bit rubles. Doesn't matter probably if you're from across the world and you're just laundering money, or they're trying to get your Bitcoin converted into something, or if you're inside Russia. If you can't say where that money came from, then the bit ruble is going to impose like a 13% tax, or could be as high as 17% tax, which is essentially saying that there's like, called a 15% tax, money laundering fee, or siphon your money in through Russia fee. And this is going to allow the exchange. It's going to, just like Bitcoin allows the pegging of Bitcoin to every fiat, the Bitcoin of every altcoin, the bit ruble in Russia is going to allow the pegging of Bitcoin into, this cross peg between Bitcoin and the fiat currency, which is going to allow people to have more ease to exchange between cryptocurrency and their uses in Russia. And it's also going to create more liquidity of getting more Bitcoin into the country of Russia itself. And so while, fiat crypto goes against the principles of blockchain technology, there's definitely, we can reasonably predict that this is going to happen, because it's going to give the fiat currency that competitive advantage in terms of the cost and the speed, at least in the short term, which is going to give additional time for the banks to pivot and maintain their survival. So we have Bananax Fusion. Hey man, I'm 16 years old with 130 into BitConnect, and I got 200 more cash. All right, so BitConnect. We do not support BitConnect. We think BitConnect is bad. We think BitConnect is a Ponzi scheme. BitConnect is a company, and the more, the way BitConnect makes its money is, people have affiliate links, and you put money into BitConnect, and you get other people into BitConnect, and the more people you get into BitConnect, the more money you make, and a lot of people are getting rich off BitConnect. But BitConnect is a Ponzi scheme, and for us personally, not only do we not want to be the last person on that ladder, not only do we want to not be the second or third or fourth last, to last person on that ladder, but we don't want to be any part of that ladder. We think that it's a whole system that is going to fail, and so we don't want to be part of that system where a lot of people are going to see a lot of losses, and we're predicting to see a lot of losses at some point in the future. And so we're essentially anti-BitConnect, and so you're saying you're 16 years old, you have $130 in the BitConnect and 200 more in cash. Yeah, I don't have any financial advice for you. I definitely recommend that you look into BitConnect, because I wouldn't recommend to anyone that I know and love to put their money into BitConnect. I would just hodl, crypto. I would hodl Bitcoin. I would hodl Ethereum. I would understand the market, take a look at the market myself to try to get a better sense of the technology, And but long term, I mean, I don't think you could really go wrong, you know, diversifying between some of the top tokens. Yeah, moving forward. Yeah, rough to play, absolutely. I'm not sure what the ultimate aim is, if it's to bring fiat currency under huge pressure, but that seems how the banking system is set up to work. Once that happens and people have two different types of currencies, we've heard Andreas Antonopoulos talk about this. We've seen this before in the past as there's been shifts in the way that money comes out, that when there's two forms of money and one of those forms of money is good money and the other is bad money, people are going to hoard the good money and then they're going to spend the bad money. So ultimately, people in their own minds have a sense of what they consider to be good money and what they consider to be bad money. And when they first get involved in Bitcoin because of the news about the incredible gains, they might be thinking that Bitcoin, you know, they might be thinking that Bitcoin is interesting, but the fiat is the good money. And then after they start learning about what's happening in the world, they might start to recognize that fiat is the bad money. So, you know, there's definitely this shift that happens where Bitcoin is bringing people in for the investment, and then it's shifting their understanding about what money actually is and what fiat actually is and why does fiat even have value. Yeah, I mean, this is definitely going to get to points of confrontation in the future, and be prepared, gain more information, hodl your tokens, get past 2020, start thinking about 2030, right? Mike, you're welcome. Hearing that about BitConnect, and yeah, for the you know, couple dozen people on the channel, for anyone out there, you know, we so don't believe in BitConnect. Like, we don't ever talk about BitConnect. There's a lot of people that talk shit about BitConnect, that say very bad things about BitConnect, and then they have a BitConnect affiliate link right in their comments. Like, we refuse to even have an affiliate link. I've never even signed up for it. Yeah, so that's how strongly we feel against BitConnect. But you know, we're not big fans of most affiliates. But I guess what it comes down to is that if there is a project that we believe in, we will have an affiliate link. If we have an affiliate link, on some level, we believe in that project. Cool. So with that being said, I think this was a good show. I think this was a fun show. I think we learned about a lot of information. You got to go. I got to go. We all got to go. But, you know, leave your comments in the comments box below. Like this video if this helped you and brought you any interesting information. It really helps us. It helps other people find this content. Check out more about minting coins in the comments box below, and subscribe to this station so you don't miss out on important news, as we're going to get more and more interesting content to you as major news comes out and as the industry progresses. And until then, and until next time, I'm glad that together we are minting coins.